Boom, welcome to the channel. My name is Stock Brock. I go by Brock as well. Today we're diving into one of the most controversial EV stocks currently in the market, Rivian. Competitor of Tesla, or is it headed for the next big disaster? Let's break it down today. First, let's talk about the R2 game changer. R2 coming out in early 2026 at just $45,000 compared to their R1 models, which just start at $75,000. That is a strong bull case for this company to really make them more affordable for the average American. Second, they're also making real progress on profitability. Rivian just hit their second consecutive quarter of gross profit at $206 million in quarter one 2025. They've also slashed costs by over $100,000 per vehicle compared to just a few quarters ago. So now they're losing about $39,000 per vehicle. So that's a massive improvement in just 2 years. Third, they have a Volkswagen partnership, which is huge. Volkswagen just invested another $1 billion, bringing their total commitment to $5.8 billion. This isn't just cash, it's validation from one of the largest automakers. Volkswagen gets access to Rivian's cutting-edge software and EV architecture, while Rivian gets the funding and manufacturing expertise it desperately needs. So I think this partnership will just give them that edge to not fail. And I think Rivian will help build on Volkswagen as well and making better cars. So fourth, bull case, they're in the right market at the right time. The EV market is projected to grow at 32% annually through 2030. And Rivian is currently dominating the EV electric truck, EV electric truck, same thing. Adventure SUV space, a niche Tesla barely touches. Tesla has their Cybertruck, but Rivian is focused more on this niche compared to Tesla. What could go wrong for Rivian? The bear case. Here's a reality check. Rivian is still burning cash like crazy. They delivered only 10,661 vehicles in quarter two of 2025, down 23% from last year. I think it's just the current landscape of the economy right now, tariffs, people aren't spending as much. Production was even worse at just 5,979 vehicles. For a company that needs to scale to survive, these numbers are a bit concerning. But if you look at other competitors like Tesla, they're not doing so hot either. So I think it's fair to say to wait this out and see how it comes out the next 3 to 4 quarters. If it keeps trending down, not looking so good. The competition is also getting very fierce. Tesla Cybertrucks, Ford has the F-150 Lightning, GM has the EV Hummer, which looks really good. Every major automaker is rushing into the electric truck market and SUV market. Rivian's early mover advantage is disappearing a little bit fast. We also have tariffs and policy risk. Trump administration's tariffs are adding thousands of dollars to production costs. The potential loss of EV tax credits, which just happened with the big bill, and Rivian's guidance already dropped from 51,000 deliveries to just 40,000 to 46,000 for 2025. And it's pretty fair to say that most of the EV companies are going to have a rough 2025, but I guess we'll see. Bottom line, Rivian is still the definition of a high-risk, high-reward play. If they nail the R2 launch and achieve scale, this could be a 10x stock, definitely. But if they can't control costs and losing the EV adoption race, shareholders could lose everything. My take, I personally am not building a position in Rivian. If I do, it's going to be a very small position. But what do you guys think? Below. Thanks for watching. This is Stock Brock. Peace out.